Good afternoon, everyone, and welcome to another edition of Your Daily 5 presented by StockCharts TV. I am your host for today's show. My name is Grayson Roze. I am the Vice President of Operations here at StockCharts.com, as well as the author of Trading for Dummies and Tensile Trading, the 10 Essential Stages of Stock Market Mastery. It was so fun to be on this show about a month ago. I'm thrilled to be back with you today to share 5 of the charts that I'm watching. So let's dive into the action here. First up, we've got VTI. We're going to check in on the total market. We're going to check in on where the market stands. Now, the key thing that I'm watching here is this island reversal pattern that we're seeing form across a lot of the major indexes. So I am using VTI here. I want to talk about this for just a quick second. VTI, if you don't know it, is the Vanguard Total Stock Market Index. Now, it's very broad. It measures everything in the US as a whole, putting it all together into a cap-weighted index. So it's still largely sort of weighted towards the big caps. It's going to track kind of like the S&P 500, but it does give you broad exposure to a lot more than what's in just the 500 components of the S&P 500. So VTI is interesting because it's so broad-reaching. It really is the total stock market. And when I'm looking at sort of the position of the market, trying to figure out, where we are, VTI is 2 things. It's an incredibly broad index, but it's also something that I can trade. So I do actually own this in some of my portfolios. This is sort of a core holding that you can use for just broad market exposure. It is a tradable ETF. Now, going back to this island reversal pattern that we're seeing, this is something that's forming across a lot of charts, not just in the US, but around the world, really. For those of you who don't know, an island reversal is what we have here on the right. I've got the zoom thumbnail turned onto my chart so you can see it pretty easily. And in island reversal, we have a gap up followed by a quick sort of gap back down. Now that leaves kind of this island of bars, island of candlesticks there, sort of floating that you can see. And it typically indicates sort of an exhaustion of a move. So we're seeing this exhaustion of the move higher with this quick island reversal pattern. That's, particularly as we continue to see the indexes start to drift lower, like we're seeing today. This is sort of an indicator that we might be seeing the end of this big run that we've seen over the last couple of weeks, couple of months, and prices might be going lower. So that island reversal is something that you're going to hear a lot of talk about, I think, in the coming weeks. And so that's something that I am definitely watching across not just VTI, but a lot of charts as well. So next up, we have what I call the market mindset meter. So a bit of a complex chart. We're going to walk through it here. 3 elements to this chart. We have the equity only put call ratio. That's the red line that you see there. We have the S&P 500 charted behind that. And then below we have the VIX. So what this chart is intended to do is sort of give you a sense of the market's internals and the character or the mindset that's kind of driving the market. Where are we from sort of a feeling positioning standpoint? So we'll start with the VIX at the bottom, just because it's the one that a lot of us are most familiar with. The VIX is a measure of volatility, and as we can see there in the big collapse that we had in February and March of this year, we had the VIX spike to wild highs up well above 80. Now we've come back to levels sort of in the 20s since that move and on this move higher that we've seen, the reversal. But we're still kind of elevated there in the 20s. And now what we're starting to see as this island reversal takes hold is the VIX beginning to spike. So I'm watching volatility quite closely. Now on the put call ratio, this is an interesting one because on its own, generally, what the put call ratio measures is sort of how traders are positioning themselves. Are they buying more puts? Are they buying more calls? If they're buying more puts and betting that the market is going to go down, this ratio is actually going to go up. If traders are buying more calls and betting that the market's going to go up, the ratio is actually going to go down. So it kind of moves inverse to the direction of the market, up and down. Now, by inverting it, which is a trick that we can do in stock charts just by adding a little dash in front of the symbol here is $CPCE. So if you add a little dash in front of that, you can invert this ratio. By inverting it, we change the directionality and we actually move this ratio sort of in line with the market. So what we can see here is that anything actually below, because remember this is an inverted ratio, anything below about 0.55 on the CPCE, the put call ratio, gets us into pretty dangerous territory. What we associate that with is complacency in the market. Traders are just continuing to buy calls, betting that the market is going to go up and up and up. And typically, anything sort of below that 0.55 level is where we start to see complacency really set in and reversals become likely. So anything below 0.55 on the CPCE, my sort of radar ticks up, my antenna goes up, and I start to watch pretty closely. So we can see that that right now we have been below that level. We were, as of this chart, at 0.526, which is below that 0.55 level that I like to watch. So we're coming back off of that, but definitely an interesting time to be watching the put-call ratio here. Now, next, we're going back to VTI, and we have something that's not a price chart, but it is in a sense. This is a seasonality chart on StockCharts. So this is something that you can pull up. What I've done is I've looked at 20 years of historical price data. I've dragged that slider at the bottom all the way back to show 20 years of data. And this is a very simple measure of historical price history across the different months of the year. So if you're not familiar with reading our seasonality charts, there are 2 numbers per bar that you need to be aware of. The one on the bottom that you'll see along the bottom, where it's got you know, a negative and a positive, for June, it's down 0.5. That indicates the average percentage move in that month. The number at the top of the bar indicates the percentage of the time in that month that prices have gone up. Has it been an up month? Has it been a down month? Very simple measure. So for June, what we can see is that June, over the last 20 years for VTI, has gone up 55% of the time, but the average move, percentage move, has been actually down 0.5%. So what I'm watching here is some weakness in June, July. Actually, July has been an okay month, but not up that high, that much of the time. And August has been weak, and September has been weak. So in concert with that island reversal that we're seeing, and the weakness that we see typically through the summer, through some of these summer months, that's something that I'm watching here pretty closely with the seasonality chart. So definitely one to check out. It's a great chart and a great resource for not just ETFs, not just indexes, but also individual stocks as well. If you're watching a stock, you want to see what the seasonal price patterns have done. Seasonality on StockCharts is a great resource to do that. So VTI seasonality, something that I am watching closely. Now, next up, we're going to shift away from the sort of the market analysis, and we're going to get into a couple of stocks. I've got 2 stocks here for you. Now, something that I do every week in my weekly portfolio review, I end my process every week. I go through all the market charts, I go through all my portfolios and all my watch lists, and I narrow everything down to what I call 10 I'm stalking. So every Sunday, I have this very concentrated, very specific list of 10 names that I really like, that are setting up well, that are approaching new highs, showing relative outperformance, showing nice accumulation, all the things that I look for technically. I put together this list of 10 I'm stalking. Now, as I go into the trading week, that gives me a very concentrated list to focus on. I'm not having to worry about, you know, oh, what should I buy? Oh, maybe I'm going to touch this. Maybe I'm going to go look at this. Oh, this is new. I'm focused on this list of 10. It keeps me narrow. It keeps me sort of, again, focused, concentrated on this list of 10. So Alteryx is one from this list of 10 I'm stalking this week. This is a stock that's setting up really nicely. It's been consolidating here for a while after a long run up since its IPO a couple of years ago. Trying to break out to new 52-week highs, which is something that I'm watching very closely, showing nice accumulation, showing nice relative outperformance, good relative strength here, which is great. So Alteryx is one that I'm watching. Also an interesting name because this is a data stock. So in the era of cloud, which we're seeing a big pickup on through this COVID world, Alteryx is one that's kind of uniquely positioned to thrive as so many organizations, so many companies look for, you know, big data analysis, things like that. So Alteryx is one from my list of 10 I'm stalking. Similarly, I have CrowdStrike Holdings. Now, CrowdStrike is a sort of a cloud security play, a pretty interesting stock. And again, nice relative outperformance, approaching new highs, sort of been consolidating here for a long time. Nice accumulation on this stock, which is great. So this is another one on that list of 10 I'm stalking this week that I really like. And again, you know, uniquely positioned sort of for this this remote work world and everyone moving to the cloud and looking to keep things as secure as possible. So CrowdStrike, another one from that list of 10 I'm stalking. So that is the 5 that I've got for you today, my daily 5 this week. If any of this has interested you, a couple of resources you can check out. Visit me at Stock Market Mastery. That's my sort of personal website. You can follow my work and subscribe there and keep in touch. I'd love to keep in touch with you. You can check out any of my books, Tensile Trading, The 10 Essential Stages of Stock Market Mastery, or Trading for Dummies. Also, follow me on Twitter. There's a pinned tweet at the top of my profile right now, which has a couple links to some of my market evaluation charts, also the 10 I'm Stalking list. Those are all things that I shoot out on Twitter every week. So you can follow me on Twitter. You can go get that 10 I'm Stalking list every week. You can look for that market evaluation list. Love to share that with you. It's got 21 charts in it that you can install right into your own StockCharts account. So a little bit of fun there. Anyways, I am so thrilled to be here. Looking forward to being back on the show, and can't wait to join you again very soon for another edition of Your Daily 5. Thank you so much for tuning in. Thank you for watching StockCharts TV. Keep charting, my friend. Hey guys, Grayson Roze here with StockCharts.com. Thank you so much for watching. I hope you enjoyed this video. Remember, if you did, give us a like down below, leave us a comment. We'd love to hear from you. And most importantly, don't forget to subscribe to our YouTube channel for daily content from an incredible collection of technical analysts and financial minds. We'll see you back here very soon. Happy charting, my friends.